While many of us might be a little afraid to open our next 401k statement, our next guest says to stick to the plan. Adam Bold is the founder and CEO of the Mutual Fund Store and joins us live from his company's headquarters outside of Kansas City. Good morning, Adam.
Hey, good morning, Roger. Thanks for having me.
Well, happy to have you today. I, like a lot of other people, do have a 401k account, and looking at what's been going on in the market, starting to freak out a little bit. What's your advice?
Well, first of all, don't freak out, even a little bit. Look, the reality is that when we had the market lows on March 9th of 2009, the market went pretty much straight up from 6,600 to 11,000. Now we've had about a 1,000-point pullback, and that's just a natural part of the ebb and flow of the markets. There's a big difference between a 10% correction like this and the kind of 50% drop that we saw in 2008 and the beginning of 2009.
Well, what advice do you have for people as they're getting into the market? Maybe people are just starting to put more money, allocate more money into their 401k. What would you advise to them?
Well, here's the thing. There are a lot of things in this world to be afraid of right now. We hear about the sovereign debt crisis in Greece. We hear about the oil spill, the political situation. And so it's very easy to say to yourself, well, this time things are different than they've been in the past. But, honestly, over history, we've been through lots of political turmoil. We've been through lots of natural disasters. And yet the stock market has still figured a way to work its way higher. And I expect that that's what's going to happen over the next several years.
Well, what do you have to say about corporate bonds? Are they a good move right now?
Yeah, corporate bonds scare me a little bit. It's not just corporate bonds. It's bonds in general, treasuries, corporate bonds, bond funds. What happened is because bonds have done so well over the past several years and stocks haven't, there's been a lot of retail investor money that's been moving into bonds, and at the exact moment that interest rates are at all-time lows. And here's what happens. When interest rates go up, the value of existing bonds go down. And I think there's a lot of people that don't know that they can lose money in bonds, and that's more likely than not going to happen sometime over the next year and a half.
Okay, so no to bonds. Now, you guys have a mutual fund store in Harrisburg. Can people pop in anytime, get some more information?
Yeah, absolutely.
Great information there, Adam. Thank you so much. Have a great day. And people out there, myself included, don't freak out.